Hi, this is Dana Gardner, Principal Analyst at Inter Arbor Solutions, and you're listening to BriefingsDirect. Our next digital business innovation panel discussion explores how a Matchmaker application assists small businesses impacted by natural disasters in the United States. By leveraging the data and trust inherent in established business networks, Apparent Financing by SAP is creating digital handshakes between lenders and businesses in urgent need of working capital financing. The solution participants, all in the SAP Ariba Network, are putting the innovative model to good use by initially assisting businesses impacted directly or via supply chain disruptions from such disasters as forest fires and hurricanes. To learn how data-driven supplier ecosystems are enabling new kinds of Matchmaker finance relationships that work rapidly and at low risk, we're now joined by our panel. Please join me in welcoming Vishal Shah, co-founder and general manager of Apparent Financing by SAP. Welcome, Vishal.
Thank you, Dan.
Glad to have you with us. We're also here with Alan Cohen. He's Senior Vice President and General Manager of Payments and Financing at SAP Ariba. Welcome, Alan.
Thank you. Great to be here.
Thank you. And we're here also with Winslow Gardner. He's President of Gardner Group Technology Solutions, LLC in San Diego, California. Welcome, Winslow.
Thank you, Dana. Appreciate it.
All right, Vishal, let's start at sort of a top level and drill down a bit. What is unique about this point in time that allows organizations like Apparent Financing to play matchmaker between lenders and businesses? What's new that allows this to happen?
Yeah, I think that's a great question. So let me go back in history. The historical problem that limited small businesses to access financial services with ease was lack of trust and transparency. It's, I think, also popularly known as the information asymmetry problem. And to your question, I think at this point in time, there are three emerging trends, which I call the forces, that are truly transforming the small business finance industry. The first one is digitalization of small businesses. From digital bookkeeping systems, which are becoming more affordable and accessible even to the smallest of businesses globally. The second force is the financial industry innovation. The financial crisis of 2008 actually unlocked new opportunities and created a disruptive industry called fintech. This industry's strong focus on delivering the frictionless customer experience is, to me, the key enabler for this. And third force is the technological innovation. Think of cloud computing, mobility, and APIs, which has now made it economically feasible to access financial information about small businesses, which are stored in these bookkeeping systems and the e-commerce platforms, accessible today. And it's really the confluence of these three forces that solve that information asymmetry problem, leading to both reduction of risk and cost to serve to small businesses.
Alan Cohen, it certainly sounds like there's this fertile opportunity to work with these trends that Vishal has outlined. Why is this a perfect fit for something like the Ariba Network? Tell us a little bit about why your business model and business network are helping Apparent Financing with its task.
Sure. I think about it in two ways. First, thinking differently about combining the physical and the financial supply chain. Historically, the Ariba Network has been focused on connecting buyers with their suppliers. And now what we're doing is taking the next step in this evolution to better connect the physical with the financial supply chain to provide choice and value to suppliers about access to capital. And then the second piece of it is leveraging data. There's a ton of excitement in this world for artificial intelligence and machine learning, and I'm a big proponent of all of that. These are going to be awesome technologies and help society and businesses as they evolve. though it's super important to keep in mind that the strength of the Ariba network is not just its size, $2 trillion in annual spend, 3 million suppliers. It's the real data. It's the real intelligence from this transactional data that will enable lenders to make risk-adjusted lending decisions. And that real data goes beyond just traditional lending and helps these lenders assess risk differently, and I think this will help transform how lending is done to small and medium-sized businesses as time evolves.
So, Winslow, we've had sort of a culmination of a number of events. Some of these are trends that have been in the works for 20 or 30 years, but are now sort of coming together in a way that can help real people in real situations. Tell us about Gardner Group Technology Solutions and how you've been able to benefit from this new confluence of interesting elements, financing, data, and platforms.
Gardner Group Technology Solutions, we provide intrusion detection, installation services, security cameras, Wi-Fi installation for primarily corporate and municipalities. We find ourselves as a supplier and an installer with consistent requirements for obviously working capital to keep our business functioning correctly. Major challenge for us, though, showed up in late 2017 when the Southern California fires took place. In reality, we had already ordered product for several installation sites, and because of the fire, those sites actually were burned down. And the time to be able to recover from having already spent the capital, plus the fact that the business was no longer going to come our way, really created a need for us. We had previously looked at working capital lines and other possible resources. The challenge, though, is that it is fairly complex. Our company is really good at what we do. We are not good at finding financing and taking the time to interview multiple banks, multiple lenders. The process to just find the right type of lender to work with us, that in itself could possibly take 4 to 6 months. In this particular case, we just did not have the time or actually the manpower to do the type of due diligence necessary to make that happen for us. And we find ourselves, even on a day-to-day basis, that dealing with large corporations and others, we invoice with the hope to get paid in 30 days, but in reality that doesn't happen. But we do need to pay our suppliers to maintain our credit terms and get delivery when required by making sure they get paid on the terms that we've agreed to. Therefore, we were fortunate enough to be introduced to Vishal, and from that point on, he made it, actually, they turned it into a one-stop shop for us to be able to take what we had and to work with it, especially under the SAP guidelines. It helped us to be able to have confidence that we were working with a credible source, number one, and number two, that they would deliver on what we agreed to.
Vishal, it sounds like, of course, small and medium-sized businesses can be disrupted, that they're vulnerable. They have lag times between when they can get paid and when they have to pay their own suppliers. So a fertile ground here, a big market opportunity, an addressable market, if you will. But finance organizations almost ignored this. Why was that? Why has bringing finance options to companies like Gardner Group been problematic in the past?
Sure. So I think, going back in time, if you think of pre-2008 when the global financial crisis event started, I think prior to that, there was a lot of supply in the market, and small businesses did not have to struggle as much to get access to capital. Since then, I think banks have been faced with increasing regulatory burdens, as well as the fact that the cost to serve small and medium businesses has become much larger, and therefore banks, the Main Street banks have shied away from lending or serving this market. I think that has been one of the big factors. The second is that banks have not truly embraced the power of technology till date, and they haven't focused as much on delivering customer-centric propositions, given that most of the banks today are very product-centric organizations and very siloed in their approach to serving customers. So I think the fundamental problems were, one, the structure of the banks and the way they were incentivized to serve this market, and secondly, the turn of events that happened post the financial crisis, which effectively resulted in the traditional lenders just backing out from this market, significantly reducing the supply side of the equation.
So, Alan, a great opportunity to strut how this model can work by coming to the rescue of organizations impacted by natural disasters. But it seems to me that this is a sort of a bellwether for a future wave of business services because of the transparency, the data-driven intelligence, and the security and mission-critical nature of SAP and SAP Ariba's networks. Do you see this as I do, as a sort of an opening inning in a longer game? And why should we be thinking newly about how business networks and data-driven intelligence can foster entirely new markets, new business models?
Absolutely. I see it in the early stages of a evolution, and I think there are a few reasons that come into this. One is ease. Winslow had talked about it. It can be very hard for small businesses to access different banks or lenders to get financing. So having an easier way of doing it, you see a lot of transformation that's taken place in consumer banking. That transformation has not followed through in business banking. So I think one opportunity is ease and process transformation. Another piece of this is trust. And what I mean by that is the data from SAP Ariba is high-quality data that lenders can trust, and being able to trust that information is a big part of this process. And then finally, like any network, a network needs to connect participants, and being able to connect businesses with lenders evolves just as Ariba's connected buyers with suppliers to transact. This is a natural evolution of the Ariba network. So I'm very excited, while yes, still early in a longer journey, that this process will fundamentally change how business banking is done.
So Winslow, we heard that you had an hour of need, certainly circumstances beyond your control. You heard from Vishal. Tell me what happened. What was the organization that he was eventually able to match you up with, and what was the outcome?
Well, Dana, the real unique thing here is that we were able to submit a single application to allow us to have offers by more than one lender. We decided on and agreed that it made sense for what we needed to do, that Foundation ultimately is the lender that we chose to go with. All lenders were competitive in their offering, but Foundation had a couple of things that were more specific to our business that would make it work better for us. The time frame to get things done, I was skeptical that we really would get this done, but at the same time, again, having the confidence, having worked through the SAP Ariba Network previously, that once we submitted the application, we actually stopped looking for other resources because we just felt that this would work for us. And fortunately, it did end up that way. But within 30 days, we were talking with lenders. We were able to get a term sheet to understand what could be available to us, gave us time internally to make decisions on what would work best for us, and ultimately we closed in on the transaction, and it's been a good working relationship between us and Foundation ever since.
And Winslow, do I understand correctly that this isn't just going to be perhaps a one-shot deal, but in fact perhaps is a new business operating model for you all, that you're able to take a revolving line of credit and thereby have a more secure approach to business, maybe even increase the type of risk that you're willing to take to go out and find new clients. So is this a one-shot deal or a Band-Aid, or is this something that's in fact changed your business?
Oh, absolutely. Having to use a revolving line of credit has become a staple for us now, because it's a way for us to maximize our cash flow with our business, add additional clients now, and take on new jobs that we probably may have still taken on, but we would have probably pushed them out later in time. So we're able to deliver our services faster at this point in time. And so it is the absolute right solution for what we needed and what we will continue to use over time.
All right, Vishal, it's very clear that organizations like Gardner Group are benefiting from this new model. It's very clear that SAP and SAP Ariba have the platform, the data, and the integrity and trust to deliver on it. But another big component here is to make sure that these financing organizations are comfortable and are eager and are being brought the right information that they need to make their decisions. So tell us a little bit about that side of the equation. How do organizations like Foundation and others view this, and how do you keep them eager to find new credit opportunities?
Yeah, that's a great question. So, if you think of Foundation, they are not a typical bank. So they look at any e-commerce platforms, any technology service providers as, new distribution channels by way of which they can access a new market, a new customer base. But not only that, I think, beyond just using these channels as a way to market their own products and solutions, they actually have a much bigger reason to, look at these ecosystems that we have developed over the years. And let me also give you some perspective here. In my view, banks and lending institutions look at businesses like Gardner Group using what I call the rear view mirror. And what I mean by that is lenders mostly base their lending decisions or credit decisions by obtaining information from credit bureaus, which they believe is an indicator of their past performance. And that good indicator of their past performance is also taken as an indicator of good future performance, which, yes, does work in some cases, but not in all. By working with us, I think Foundation now not only can look at traditional data sources like credit bureaus, but they are truly able to assess the financial health of a business and the risk of lending to a business through alternative data sources like the one Alan mentioned, which is the SAP Ariba supply chain data, which provides them an increased degree of confidence before they take such prudent lending decisions. The data in itself, doesn't create value. I think data, when processed in an appropriate manner, and, when we start learning from the insights that the data provides us, I think our lending partner is able to get a more precise view of not only the historical business performance, but also a very realistic view of the future position and the future cash flow positions of a small business. And I think that is an incredibly powerful proposition for our lending partners to comfortably and confidently lend to, businesses such as Gardner Group.
So Alan Cohen, kind of a win-win-win so far. Everybody seems to be benefiting, but this could not have happened until the innovation of the model was recognized and then executed on. So how did this come about? How did payments and financing innovation get started? I believe that there was a SAP IO Venture Studio involved behind Apparent Financing. Maybe tell the story about how SAP Ariba, and Apparent Financing came together to allow this sort of innovation to actually take place and not just remain in theory.
Sure. Well, like anything, it first starts with that of the marketplace and looking at a problem that at the end of the day, financing is very inefficient and expensive for both suppliers and lenders. So, from a supplier, we talked about this, it's a complex process. It's not always the most competitive because people don't have the time. And, from a lender perspective, originating loans and mitigating risk are very important, and this process hasn't gone through a transformation. And we looked at it and said, gosh, how can we better leverage the Ariba network and the data involved in it to help solve this problem? And with that, SAP I.O. is a venture part of SAP that incubates new businesses, and this got started about a year and a half ago to bring this to market to really look and challenge how things are done and open up new opportunities. So it's a very innovative approach to challenge the status quo, to get not only businesses to think and look at this differently and seize opportunities, though also for the lenders. And if you think about what the Ariba network is, we ultimately run commerce, and we want the lenders to fund commerce. And we are simply helping to bring those two together, leveraging some incredible data insights along with the security and trust of the SAP Ariba brands.
It's, of course, important to have the underlying infrastructure in place, to have the data availability, the trust, the integrity, the mission-critical nature. But in more and more cases nowadays, that user experience and simplicity element also seem to be terribly important. So let's start with Winslow. When it came to how you interacted with this process, that is to say the user experience, the interactions, the interfaces, did you find it simple? Did you find it direct? And how important was that for you as a small to medium-sized business to be able to take advantage of this?
To answer your question, we found it to be very straightforward. It didn't require us going outside of the data that we have internally within our easily to be grasped. We didn't have to bring in our outside CPA firm or a legal firm to be able to begin the process. We were able to interface by email, by simple phone calls, but the amount of time that it required was so simple. I'm still surprised that, based on our previous experiences, that we were able to get this to happen as quickly as it did happen.
Michelle, how do you account for the ability to make this simple and direct for both sides of the equation, for the borrowers like Winslow, but also the lenders like Foundation? Is there something about what investments SAP has made over the years in technology and understanding the interface and the importance of the user experience? How do you attribute getting from what could be a very complex process to something that's boiled down to its essential interface simplicity?
Yeah, I think that's a great question again, Dana. I think a lot of people actually misunderstand the user experience and correlate that to developing a very nice front end, nice-looking front end, creating an online experience, making it seamless and easy to use. I think that is only a part of the truth and part of the story. I think what goes behind that nice-looking user interface is really eliminating what I would call the friction points in a customer journey. And a lot of those friction points are actually introduced because of manual processes, behind those nice-looking screens. And secondly, it's because there are a lot of exceptions, business exceptions, as you might imagine, that happen, when you're trying to facilitate a complex, transaction like a financial credit transaction. So to overcome these two challenges, one which relates to ensuring that customers, or borrowers have a seamless customer experience, we actually provide a very transparent process accessible to them, so they know at every single point in time where they are with their credit process. Like, are they approved? Are they disapproved? Are they waiting on certain decisions, or are they negotiating the deal with the partner? So that is one element where we bring in an increased level of transparency and openness to the process, which has traditionally been very opaque. Like, historically, businesses submit applications to banks and literally wait for weeks to get a decision, and they don't really know what's going on inside the four walls of the bank, for those many number of weeks. The second thing we did for our partners is try to help them understand how some of the exceptions that they traditionally encounter in their credit decision process, they could actually either reduce those manual exceptions or completely eliminate them with the help of technology. And again, the insights that we generated from the data that we already had about the business actually helped us overcome those challenges and overcome those friction points in the entire end-to-end journey on both sides.
Alan Cohen, where do we go from here? This is a model that seems to me to have great use case extensibility. We've seen that you've really done yeoman's work in managing the process, the interface, the user experience. And it's great that you're applying this to natural disasters, and unfortunately there's too many of those going on. But let's look a little bit beyond that. Where do you go next with this particular program around financing, and how does this become, as I say, a bellwether for other types of business services that can depend on the platform, the data integrity, and the simplicity of the process?
A few things, and simplicity is, I think, first and foremost, and Vishal and Winslow talked about it, and the idea would be, just as you can get a consumer loan online, it should be as simple for a business to get access to capital online, and making that a truly pleasurable process, not a complex process that takes a long time. So simplicity cannot be underrated to help drive some of this change. The second piece of the data, we've scratched the surface of what can be done. We talked certainly about risk-adjusted lending decisions based on the transactional information. And I think what we'll see is, as more and more things happen, we'll see price elasticity of both risk and demand come into play as banks help to better manage their portfolio, not with theoretical information, though true, practical, actual information that they'll have better insights into manage their portfolio. And I think the other big win is, let's not lose sight of what we're trying to accomplish, broaden the capital availability to the community of businesses. And I think whether, there's so many different types of lending scenarios that could happen, and I think you'll see more and more of those scenarios become available to businesses over time, and in a much more efficient, cost-effective, and economic manner that truly it's not a shifting of cost. I think it will be an elimination of cost where both parties win in this process.
Well, great. Let's give the last word to Winslow. For other small to medium-sized businesses that are facing credit issues or maybe didn't even pursue revolving credit because of the complexity and the way in which they've been treated by the large lenders, what advice do you offer? What recommendation might you have for organizations to rethink their financing now that there are processes like what Apparent Financing is providing?
The thing is, I take a step back and go, we kind of made what I would call the classic mistake when we should have put in a bank line or a few other things earlier prior to this event happening for us. The challenge, again, has to do with just the time frame going through the vetting process. We'd rather pursue newer clients than spend our time having to work with the different lenders trying to make this happen. So in another way, it really is something that I think most small businesses should pursue, but I would only recommend they pursue it under something like this, because the simplicity, the one-stop portal to find what you're looking for, just the efficiency of the process, and then actually the quality of the lenders. All the folks that we spoke with, all very capable, all really wanting, that's another thing, they all wanted to do business with us, which was really outstanding as well, versus the pushback, and we'll let you know within the next 30 to 60 days or so. Very challenging. For us, we've been able to not only add new clients since we have put in the revolver, but our DUNS score has improved, our credit rating has continued to improve, and so I think it's a low risk for small businesses to be able to take a look at a platform like this to see if, in fact, this could be useful to them. I highly recommend it. It has been nothing but positive experience for us.
All right, I'm afraid we'll have to leave it there. You've been listening to a sponsored BriefingsDirect Digital Business Innovation podcast on how new financing applications are assisting small businesses impacted by natural disasters. And we've heard how leveraging the data and trust inherent in an established business network like SAP Ariba has allowed Apparent Financing by SAP to create a digital handshake between lenders and businesses in ways that just weren't available before. So please join me now in thanking our guests. We've been here with Vishal Shah, co-founder and general manager of Apparent Financing by SAP. Thank you, Vishal.
Thank you, Dana.
Also, we've been here with Alan Cohen, Senior Vice President and General Manager of Payments and Financing at SAP Ariba. Thank you so much, Alan.
My pleasure.
And Winslow Gardner has joined us. Thank you so much. He's President of Gardner Group Technology Solutions, LLC in San Diego. Thank you so much, Winslow.
Oh, Dana, thank you.
And a big thanks as well to our audience for joining this SAP Ariba-sponsored thought leadership discussion. I'm Dana Gardner, Principal Analyst at Inter Arbor Solutions, your host and moderator. Thanks again for listening, and do come back next time.